Students, I hope you all are fine, and as usual, I hope that you all are studying hard and you all are working smartly while learning and revising all your chapters. So students, in the last session I've asked you, and in fact I've requested you to please go through the module till chapter number 6, till where we have covered. So before starting with today's session, I really want all of you to reply whether you have gone through the earlier chapters. We have covered chapter 1, 2, 3, 4, 5, 6 in detail. Tell me whether you all have gone through that chapter, those chapters. So Om Krishna Gupta is saying yes. Others also please reply. Amit Chaudhary is saying yes. So Swati is saying, ma'am, I was able to cover 2 chapters. Kiran Bala is saying yes. So students, that's good that you have started, preparing and revising, learning everything. But again, the same message that before coming for the next session, try to cover all the chapters, all 6 chapters that we have covered so far, and yes, today's session also, right? So let us start with today's session, which is on chapter number 7, completion and review, right? So in this chapter, we will be covering 6 essays. Very important. You can always get practical based question out of these 6 essays, right? So the 6 essays that we are going to cover in this chapter are Essay 260, Communication with Those Charged with Governance, Essay 265, Communicating Deficiencies in Internal Control to Those Charged with Governance and Management, Essay 450, Evaluation of Misstatements Identified During the Audit, Essay 560, which is Subsequent Events, Essay 570, Going Concern, and Essay 580, which is Written Representation, right? So basically, students, when the audit is on the verge of completion, after performing the various audit procedures that you have learned in chapter number 3 and 4, after examining the various assertions that we have covered in that we have covered in chapter number 5, right? So now there are certain requirements that the auditor needs to see. Like, the auditor needs to perform certain procedure with respect to subsequent events. So there is a separate essay, Essay 560. Then there is a responsibility on auditor with respect to assessing the appropriateness of going concern, right? Assumption by the management. So that is covered by Essay 570. And somewhere or the other in the earlier chapters, we have seen that auditor obtains written representation from the management, right? So that is Essay 580, right? And whatever misstatements auditor has identified accumulated during the audit, what to do with that misstatement. So that is Essay 450. And then there are certain communication requirements, communication with those charged with governance. This is Essay 265. And when the auditor has a responsibility with respect to communicating deficiencies in internal control to those charged with governance and management, that is governed by Essay 265. So we will follow the sequence as is given in your module. So let us start with the first essay, with the very first essay of this chapter, which is Essay 560, Subsequent Events, right? So this essay is basically divided into 2 parts. Just a minute. So if you just look at how this essay will flow, you will see it is divided into 2 parts, right? 2 types of events. In fact, one is called by name of events and the other by the name of facts. So 2 types of subsequent events have been given, and the entire essay revolves around what audit procedures the auditor has to perform with respect to both the types of subsequent events. So let us first see what is the definition. So subsequent events. So the event occurring after the date of financial statement. So subsequent is what? Later on, है ना, बाद में. तो subsequent to what? The date of financial statement. But as I told you that it is divided into 2 parts. So what are those parts? So I've divided those as A And this is the second bifurcation, B and C. Further, this second part is divided into B and C. So let us see. So events occurring between the date of financial statement and the date of auditor's report. So if the date of financial statement is up to 31st March 2023 and the date of auditor report is 31st July 2023, so all those events that have occurred in this period, so I'm defining it as A period. This defining as ABC is just for the explanation part. It is not as such given in the standard, right? And then the standard says that facts that which became known to the auditor after the date of the auditor's report. So basically the second bifurcation is after the date of the auditor's report. And the further bifurcation says the facts which has become known to the auditor after the date of auditor report, but before the date the financial statements are issued. So if the financial statements are issued, let's say on 31st August 2023, so the facts that the auditor has become aware of in this period, and then facts which became known to the auditor after the financial statement has been issued, that is in this period, C period, right? So if you just look at the definition of term subsequent events as is given by SA 560, it says that subsequent events are the events occurring between the date of financial statement and the date of auditor's report, which we have defined as A in our example, and the facts that become known to the auditor after the date of auditor report. So this is the definition of subsequent event given by SA 560. Further, in SA 560, this B and C concept has been given. That is, the facts which became known to the auditor after the date of auditor's report, but before the date of financial statements, before the date the financial statements are issued, and facts which become known to the auditor after the financial statements have been issued. Is it clear? Quickly send in your reply. Is it clear? Are you able to understand and learn the definition of the term subsequent event? Because this is very important in order to understand this essay. Once this definition is clear, then only you are able to, understand the flow of the entire essay. So let me just have a look at your replies where Om Krishna Gupta, Bhumika, Kiran, Bala, students are saying it is clear. So I'm just looking at the earlier replies. Bhumika is saying, ma'am, only 5th chapter is left. Rest all is done, which is really very, very good, students. And you should try to cover all the chapters before coming for the next session, right? So subsequent events, we have seen that events occurring between the date of financial statement and date of the auditor's report and the facts. So the term that has been used is events here, and here it is facts that became known to the auditor after the date of the auditor's report. So SA 560 deals with the auditor's responsibility relating to subsequent events in an audit of financial statement, right? Now, students, we will be covering SA 700 when we will be doing chapter number 8, right? So there you will see that in SA 700, there is a topic of date of audit report. And the date signifies that the auditor has considered all the events that have occurred up to the date of the auditor's report, right? So subsequent event is what? Anything happening, events happening between date of financial statement up to the date of auditor's report and the facts that have become known to the auditor after the date of the auditor's report, right? Now, when we say that the date the financial statements are issued, so what is meant by that? This is also defined by SA 560. So basically, the date when the auditor's report and audited financial statement are made available to third parties. That is the date that the financial statements are issued, right? And it depends upon the regulatory environment, right? So it can be the date when the financial statements are filed with the regulatory authority, like companies ke case mein ROC, right? Or we can say when the financial statements are presented in the AGM, right? And students see the audited financial statements, these cannot be issued, or you can say the audited financial statement are issued along with the audit report. right? So the date of the audited financial statement should be at or later than the date of the audit report, because financial statements, audited financial statements are issued along with the audit report. So pehle audit report will come. So the date of audit report will be earlier than the date the financial statements are issued. And in fact, the date the audited financial statements are issued, this shall be at or later than the date when the audit report is provided to the entity. The auditor will provide the auditor's report to the entity, na? Uske baad hi to the audited financial statements will be issued. So a very logical point, but you need to understand this in context of date the financial statement are issued. So you may get a 3-mark question that what is meant by the date the financial statements are issued, right? So when these are made available to the third party, what? Audit report and the audited financial statement, and it depends upon the regulatory environment and when the financial statements are filed with the regulatory authority. And the date audited financial statement cannot be issued without audit report. So the date of the audited financial statement, the date when the audited financial statements are issued, this should be at or later than the date of AR. And in fact, it should be at or later than the date when the audit report is provided by the auditor to the entity. Is it clear? Is it clear? Now, in order to understand SA 560, you all must have done AS4, that is contingencies and events occurring after the balance sheet date. So only a little part of this AS understanding is required, not the entire AS. So, see, there can be two types of events. So the events for which the evidence of their condition existed as at the date of the financial statement, that is as on 31st March 2023 in our example, right? Date of the financial statements, right? So these can be what? Events for which evidence of their condition existed as on the date of financial statement, and that require adjustment in the financial statement, right? And the second is the events for which the evidence with respect to their condition that arose after the date of the financial statement. So let us try to understand this with the help of example. For example, any debtor balance was there as on 31st March. So if there is declaration of insolvency of the major debtor after the date of financial statement, after 31st March, so the same need to be provided for in the books of accounts, right? Or if there is declaration of insolvency, then the same should be written off as what? Bad debt. Settlement of a legal claim at reduced amount. So legal claim already existed as on the balance sheet date, and later on it was settled at a reduced amount. So the condition, the evidence of the condition already existed as on the date of the financial statement. Now let us take the example of the second situation, that is whereby the condition arose after the date of financial statement. For example, after the financial statements, that is 31st March 2023, after the date of financial statement, there was a fire and there was a destruction of substantial inventories or issue of new share capital, or let's say mergers and acquisition. So as such, the condition did not exist as on the balance sheet date. So such events may require a disclosure. They may not require any adjustment as such in the financial statement. So that is also to be considered when auditor is considering what? Subsequent events, right? Now, what is the objective of the auditor? So we have divided this essay for simplicity in two parts, that is A and B plus C, right? So the objective of the auditor is that with respect to the events that have happened between the date of financial statements and the date of auditor's report, with respect to such events, the auditor is required to obtain sufficient appropriate audit evidence about the events that have happened in A. What is A period? The date of financial statement and date of auditor's report. And what audit evidence? That whether if any adjustment or disclosure was required, right? Whether the same has been appropriately reflected in the financial statement. See, yahan par if anything has happened, the audit report is still to be signed now. So here to it will be auditor's responsibility to see, to obtain sufficient appropriate audit evidence, that if the event require any adjustment, or let's say any disclosure is required, and from where auditor is going to assess this? By applying AS4, right? So whether the same has been appropriately reflected in the financial statement. Clear? And with respect to the events happening in B and C period, that is after the date of financial state, after the date of audit report, right? So abhi we are talking about both B and C. So with respect to those facts, to respond appropriately, we are not saying as such to obtain sufficient appropriate audit evidence. वो तो यहाँ तक जहां तक audit report was not signed, it is the responsibility of the auditor. But once the audit report has been signed, what is the responsibility? That we are going to discuss in detail later on. But the objective is what? To respond appropriately to the facts that have become known to the auditor after the date of the audit report. Had they been known to the auditor at that date, that is at the date of audit report, it may have caused the auditor to amend the audit report. So the fact that became known to the auditor, let's say auditor as such did not perform any audit procedure, but while let's say he was viewing the news, he got to know that, okay, with respect to this client, so and so thing has happened. So this is a fact that auditor became aware. And had this fact been known to him at the date of audit report, it would have caused the auditor to amend the audit report. So that fact is so important that it would have caused the auditor to amend the audit report had it been known to him at the date of the audit report. Is it clear? Are you able to understand? अभी तक हमने क्या किया है? What are subsequent events? Whereby I've divided it into two parts. That is A, that is between the date of financial events occurring between the date of financial statement and the date of auditor's report, and facts that the auditor has become aware of after the date of financial statement. Further, the second part is divided into two parts. That is the facts that auditor become aware of after the date of audit report but before the financial statement are issued, and the C part is what? After the financial statements are issued. अभी तक हमने subsequent event का definition किया, then we saw AS4 का क्या requirement है, and then we saw the objectives. And objectives, may I told you that with respect to the events happening in A, to obtain sufficient appropriate audit evidence. See, SA 700 may the date that we put on the audit report, it signifies that auditor has considered all the events up to that date of audit report. So wahan par to auditor will have to perform specific audit procedure to obtain sufficient appropriate audit evidence that if any adjustment or disclosure is required, whether the same has been appropriately reflected in the financial statements, right? And with respect to the facts, and that fact is so important that had it been known to the auditor at the date of audit report, it may have caused the auditor to amend the audit report. Auditor will respond appropriately. Now, what is meant by respond appropriately? This we are going to see in the later part of this essay. Now, tell me whether is it clear? Jitna bhi abhi tak humne kiya, let me just have a look at your answers. So, Om Krishna Gupta, Amrit Chaudhary, Swati, Yash, Kiran, these students are saying clear. I hope it is clear for others also. ठीक है? So very interesting essays, but yes, be with me and listen to the entire discussion carefully and just keep on recalling कि अच्छा ठीक है, अभी तक हमने क्या किया? Subsequent events किया, AS4 का देखा, and then we have seen the objectives. ठीक है? Keep on just revising in your mind. ठीक है? Now when we saw that auditor needs to obtain sufficient appropriate audit evidence, how will auditor obtain that? By performing audit procedures. So the next topic is, what are the audit procedures relating to the events occurring between the date of financial statement and the date of audit report, that is the events occurring in the time period A. Clear? So first of all, yahan par to there is a specific requirement on the auditor that auditor you should perform what? Audit procedures to ensure that all such events have been identified, right? So auditor will perform the audit procedures to ensure that all such events have been identified. Clear? Now, when the auditor assesses the risk in determining the nature and extent of such procedures, so when the auditor considers, the auditor shall consider the auditor's risk assessment when he is considering as to what procedures he need to perform. So when we are saying that auditor perform various procedures in order to see that all such events are identified, now we are saying that when he's performing such audit procedures, he need to consider his risk assessment that he has done, right? And what all audit procedures auditor can perform? He'll obtain understanding of the management's procedure. See, management must have a procedure to apply AS4 or in the AS10. So what is management's procedure? Because application of accounting standard is the responsibility of the management. So obtaining an understanding of the management's procedure, right? So let me just take you through the module for this. Otherwise, also I'll take you through the module for the entire essay, but let us just see these points. So obtaining an understanding of any procedures management has established to ensure that subsequent events are identified, right? Then inquiring of management and where appropriate those charged with governance as to whether subsequent events have occurred which might affect the financial statement. So first of all, to understand the management procedure to ensure that subsequent events are identified, and then inquire the management that whether subsequent events, whether they affect the financial statements, right? Further, auditor can also read the minutes of the meeting. See, 31st August को 31st July को auditor was signing the audit report ना in our example. So 31st March को it is the date of financial statement. So if any meeting has happened here, right? So auditor will read the minutes of the meeting, and if let's say the minutes are not readily available, he will inquire the management that what has been discussed in those meetings, right? So reading the minutes, if any, of the meetings of the entities, owners, management, those charged with governance that have been held after the date of financial statement, and inquiring about matters discussed at any such meetings if for which the minutes are not yet available. Simple. And last, reading the entity's latest subsequent interim financial statement. Let's say on 30th June, interim financial statements have been prepared. So auditor will go through that. And auditor will also consider the various accounting records pertaining to the period after the date of the financial statements. Like if any budgets have been prepared, so that he can see whether any subsequent events has been considered while preparing the budgets, or let's say in the interim financial statement 30th June 2023 mein to the effect must have been considered na. So is there any subsequent event in that, right? So now let me just take you back to that summary that I have made for you. So obtaining an understanding of the management's procedure, inquiring the management, those charged with governance with respect to the effect of such event on the financial statement, reading the minutes of the meeting of the entities, owner, the management, those charged with governance, and if the meeting minutes are not available, inquiring, and then reading the latest interim's financial statement. Along with that, auditor may also consider the various accounting records for the period after the date of financial statement, like the latest available budgets, right? If such events are identified, there are events which require certain adjustments or disclosure, then auditor will ensure as to whether such events are appropriately reflected in the financial statement. And last but not the least, auditor will obtain a written representation WR from management or those charged with governance that all such events which need to be adjusted have been appropriately adjusted or disclosed. So depending upon whether the condition existed, whether the condition arose after the date of the financial statement, so whether the adjustment is required or whether the same need to be disclosed. Simple. So kya hai for the for the events that have occurred from the date of financial statement till the date of auditor's report. So first and foremost, just try to think logically. Na auditor ko perform karna hai audit procedure in order to ensure that whether events have been identified. And when he is performing such procedure, he'll consider his auditor's assessment, risk assessment that he has done. And what kind of procedures, such audit procedures mein what kind of procedures? Obtaining understanding of management's procedure to ensure whether subsequent events have been identified, inquiring management, those charged with governance with respect to the effect of such events on the financial statement, reading the minutes of all those persons, right? And inquiring if minutes are not available, reading the latest interim's financial statement, accounting records for the period after the date of financial statement, and latest available budgets. If events are identified, auditor will ensure whether the same has been appropriately reflected. And last but not the least, he'll obtain what? A written representation that all such events have been adjusted or disclosed. Quickly send in your replies whether it is clear. Okay, it is a little bit a little lengthy essay. That is why I am taking it into parts and I am asking you again and again whether it is clear or not. Okay. Now, with respect to the events that have occurred, with respect to the facts. So the term used is what? Facts. So the facts that have become known to the auditor after the date of the audit report, but before the date the financial statements are issued, so the B period. Had it been known to the auditor at the date of auditor report, it may have caused the auditor to amend the audit report. Clear? So see, the report has been signed by the auditor, right? So as such, there is no obligation on the auditor to perform specific audit procedures. So I gave you example कि news में auditor heard that okay, this is happening. So as such, he did not perform any audit procedure, but this fact became known to the auditor through a news, or let's say someone called him and gave him the news, right? Uh, with respect to the events that have occurred in A period, auditor is required to perform audit procedure to obtain sufficient appropriate audit evidence. Why? Because the date of the audit report signifies that he has considered all these events up to the date of auditor's report. Though the financial statements were closed on the date of financial statement was 2023. And he signed the report on 31st July 23. So that this date signifies that he has considered all these events. So he was required to obtain sufficient appropriate audit evidence. So with respect to the facts that he has become aware of in B and C, and more specifically here we are talking about B. And in fact, you will see with respect to B and C, almost the procedures are going to be the same, right? So first and foremost, auditor has no obligation to perform the audit procedures regarding the financial statement after the date of audit report. I hope you are able to understand the logic also. But if any fact has become known to the auditor after the date of audit report, but before the date the financial statements are issued, had it been known to the auditor at the date of audit report, it may have caused the auditor to amend the audit report. So what will auditor do? See, auditor will carry out the audit procedures on the amendment. So whatever fact he became aware of, he will carry out the audit procedure with respect to that particular amendment, right? And let's say if the management decides that the management is going to amend the entire financial statement, right? So in that case, the auditor will extend the procedures to the date of the new audit report. That is, see, the entire financial statements are amended. So auditor will give a new audit report or an amended audit report. So he will extend all his procedures till that date, not limited to that subsequent event, but till that date, he will see all the events that has happened, right? And provide a new audit report on the amended financial statement, right? And the new audit report, it will not be dated earlier than the date of approval of the amended financial statement. But obvious, after that financial statements have been amended, it has been approved by the board of directors, then only the audit report will be signed. Clear? Right? Now, if the management amends the financial statement, right? So auditor will, if the management restrict the amendment in the financial statement to the effect of subsequent events only with respect to the subsequent event, the amendment has been done in the financial statement. As such, broad financial statements have not been issued. New financial statement as such have not been issued. The effect of the subsequent events only that has been considered in the amendment. Then auditor will amend the audit report and he will include an additional date restricted to that amendment. So whatever audit report earlier auditor has made, he will include an additional date. And he will mention there that the audit procedures are restricted to the amendment in the financial statement. That with respect to this particular amendment in the financial statement relating to this particular subsequent event, I have amended this audit report. Rest all is the same, right? And if the auditor decides to provide a new or amended audit report, auditor will include an emphasis of matter paragraph or other matter paragraph, and there also he'll indicate that his audit procedures are restricted to the amendment in the financial statement. What is emphasis on matter paragraph or other matter paragraph? We'll be doing this in detail in chapter number 8. Okay? So let me just take you through the module once, then tell me if you have any query with respect to this topic. So the facts that became known to the auditor after the date of the auditor's report, but before the date the financial statements are issued, so we are talking about B period. So as such, there is no obligation on the auditor to perform the procedures. However, when after the date of the auditor's report, but before the date of financial statement, a fact becomes known to the auditor, had it been known to the auditor at the date of auditor's report, may have caused the auditor to amend the auditor's report. What will he do? First of all, he'll discuss the matter with the management. I think I missed this point from. So he will discuss the matter with the management and those charged with governance. He'll determine whether the financial statement need any amendment, and he will inquire the management that management tell us how you are going to address this matter. Simple. Okay. So he'll discuss the matter with the management, or if required, those charged with governance. He'll determine whether such matter need amendment, and if yes, he'll inquire the management that management tell us how you intend to address the matter in the financial statement. Now there can be two situations where management amends the financial statement, and the other situation is where management does not amend the financial statement. ठीक है, तो अभी तक हमने क्या देखा, that if any fact is there, as such there is no obligation, but had it been known to the auditor earlier at the date of audit report, it would have caused the auditor to amend the audit report. Auditor shall discuss the matter with the management, or where appropriate those charged with governance, determine whether financial statement need any amendment, and if so, inquire how management is going to address that matter in the financial statements, right? Now there are two parts, that is whether if management amends the financial statement, if management do not amend the financial statement. Clear? Does not amend the financial statement. If management amends the financial statement, auditor will carry out the audit procedures necessary on the amendment, right? However, if let's say the management decides to issue broad financial statement, that is to revise the entire financial statement, then auditor is going to extend the audit procedures to the date of the new audit report and provide a new auditor's report on the amended financial statement. Now here the audit procedures are not only restricted to that particular amendment, but till the date of the amended financial statement, auditor is going to perform the procedures, and the new audit report shall not be dated earlier than the date of the approval of the amended financial statement, right? And here it says that if the management restricts the amendment to the subsequent event only, that only with respect to that particular subsequent event, the amendment has been made in the financial statement, then the auditor shall amend the auditor's report to include an additional date restricted to that amendment, and indicate bhi kya karna hai, that the audit procedures on subsequent events are restricted solely to the amendment of financial statement described in the relevant note to the financial statement. What does that mean? That till the date of audit report, we have considered all the events. But after the date of audit report, still the financial statement are issued, we have considered only this particular amendment. Rest everything we haven't considered. We have considered only this particular amendment. Clear? And auditor will provide a new or amended report. So two things are possible. Either the additional date can be put in the same audit report that has been issued, or auditor may provide a new or the amended report by including EOM or OM paragraph, whereby he'll be mentioning again the same point that conveys that auditor's procedure on subsequent events are restricted solely to amendment of the financial statement as described in the relevant note to the financial statement. ठीक है? Is it clear? If management does not amend the financial statement, Acha, I haven't taken. If management does not amend the financial statement and it is required according to the auditor, then what is the, you can say, the weapon available to the auditor to modify the opinion as per SA 705. What is SA 705? Chapter number 8 mein we'll be doing this in detail, right? Also, see, if the auditor has already given the report to the management, then auditor is going to notify the those charged with governance that please do not issue the audit report to the third parties. Why? Because auditor now wants to modify the opinion. And if the management or those charged with governance still issues the report to the third party, then auditor will take appropriate action to prevent reliance on the auditor's report. He will take appropriate action. Maybe some news in the newspaper he may give, right? So appropriate action to prevent reliance on the auditor's report. Is it clear? So with respect to the facts that have become known to the auditor after the date of audit report, but before the financial statement is issued, had they been known to the auditor at the date of auditor's report, may have caused the auditor to amend the audit report. First and foremost, there is no obligation on the auditor as such to perform audit procedures regarding the financial statement after the date of audit report. But if there are certain events, right? So auditor is going to discuss that matter with the management, those charged with governance, determine whether the financial statement needs any amendment, and if so, inquire the management as to how they are going to address that matter in the financial statement. So there can be two things, that management amends or management doesn't amend. If management doesn't amend, तो क्या करना है? SA 705 में modify करना है and notify the those charged with governance that that audit report should not be issued, and if it is still issued, then auditor will take appropriate action to prevent reliance on the auditor's report. Now, with respect to the circumstances where management amends, so if that particular amendment by the management is restricted to that particular subsequent event, so auditor will carry out the procedure on that particular amendment only. Okay? And if the management amends the entire financial statement, broad financial statements are issued now, all the financial statements have been now, checked and issued, then in that case, auditor is going to extend the audit procedure to the date of the new audit report, and he'll provide a new audit report on the amended financial statement. Yahan par to audit procedures were carried out on that particular amendment only, right? And then we saw it from the module that if the management restricts the amendment in the financial statement to that particular subsequent event, then auditor can either amend the audit report to include an additional date, and he'll mention there that such amendment is restricted to the subsequent events identified in note number so and so of the financial statement, or the auditor may give a new or amended report by including emphasis of matter or OM paragraph, and there also he'll indicate that my audit procedures are restricted to such and such event only. Clear? Is it clear? Send in your replies, and if it is clear, then we'll proceed with the C part. Send in your replies. Om Krishna Gupta is saying yes. Others also please reply. Bhumika clear. Swati yes. Others also please reply. Amrit yes. Kiran Bala, Sneha, please reply. Kiran Bala is saying yes. Chalo, theek hai. Now, with respect to the facts that which became known to the auditor after the date the financial statements have been issued. So we are now talking about the C part. And again, the same thing that had been known to the auditor at the audit report date, it may have caused the auditor to amend the audit report. So these stars are basically because this line is to be repeated. And this one star is with respect to that. First point is again what? That as such, there is no obligation. Okay? So as this, there is no obligation on the auditor to perform the audit procedures with respect to the facts that after the date of after the date the financial statements have been issued, right? Now, if any fact is there which had it been known to the auditor, it would have caused the auditor to, had it been known to the auditor on the date of audit report, it may have caused the auditor to amend the audit report. The procedures are going to be the same. Discuss the matter with the management, those charged with governance, determine whether the financial statement needs any amendment, inquire how the management is going to address the matter. So almost everything is going to be same except for this part, which is what review. So what is this? Let me just take you through the module. So students, these summaries now, which these tables, these I have uploaded. I have taken the screenshots from your Saransh that is uploaded on your BS Knowledge portal. So you can also refer to the summaries of the various essays that is given in the Saransh uploaded on your BOS Knowledge portal. So now facts which became to the known to the auditor after the financial statement has issued, that is in the C part. Again, as such, first and foremost is what no obligation. However, had it been known to the auditor at the date of audit report, it may have caused the auditor to amend the audit report. The auditor shall discuss the matter with management, those charged with governance, determine whether the financial statement needs amendment, and if so, inquire how management is going to address the matter, right? Now, if management amends the financial statement, and the second part is if management doesn't amend the financial statement. Okay. So if management amends the financial statement, again, carry out the audit procedure necessary for the amendment. This was the same, right? Then extend the audit procedures. Remember, same point. Provide a new auditor's report, and the date should not be earlier than the date the financial statements are issued. Include emphasis of matter paragraph. Everything is same. If management does not make necessary option, then auditor will notify management and take appropriate action to seek future reliance. So these are same except for one point, which is what? Auditor, see now financial statements have been issued, right? And the management has decided to amend the financial statement. So auditor is going to review the steps taken by the management to ensure that anyone in receipt of the previously issued financial statement together with auditor's report, therefore thereon is informed of the situation. So see, the management has agreed here na, that we are going to amend the financial statement, and accordingly new AR audit report will come. So first and foremost, the auditor is going to take this, the management is going to take the steps to ensure that whoever has earlier received the financial statements. Why? Because here the financial statements have already been made available to the third parties. You all are aware now na, that what is meant by date of issue of financial statement, that the financial statement have been made available to the third party. That third party can be a bank also, to the shareholders or to the ROC, third party, right? So uh, what is the responsibility of the auditor? Auditor is going to review such steps. So review the steps taken by management to ensure that anyone in receipt of the previously issued financial statement together with auditor's report thereon is informed of such situation. Simple. Rest all of the procedures are going to be the same. Okay. And then read this paragraph with me. If management does not take any necessary steps to ensure that anyone in receipt of the previously issued financial statement is informed of the situation and does not amend the financial statement in the circumstances where auditor believes that they need to be amended, the auditor is going to notify the management unless all those charged in governance are involved in managing, and the auditor will seek to prevent future reliance on the auditor's report. How he can do that? See, we all know that by what I gave you example, maybe by giving some article in the newspaper, and in spite of and despite of such notification, management, those charged with governance, do not take necessary steps, the auditor shall take appropriate action to seek to prevent reliance on the auditor's report. Okay. See here. It has been mentioned that if management is not taking the steps to ensure that such people are informed, or management is not amending, so what will auditor do? If management is not amending, the auditor will seek to prevent reliance on the auditor's report. And is in despite of the auditor's notification to the management that please see that no one rely on it, still management does not agree, then auditor is going to take the appropriate action to to prevent the reliance on the auditor's report. Is it clear? Is it clear? We will just look at the entire essay from your module. Tell me, is it clear? So this was about the essay 560, which is with respect to subsequent events. Okay. Now let us just quickly revise. the entire essay, and then we are going to do the questions relating to this essay. So subsequent event kya hai? Events that occur after the date the financial statement has been issued and the date of the auditor's report, and the facts that became known to the auditor after the date the auditor's report are known as what? Subsequent event. So this is the definition. And AS4 ka what understanding is required? Since auditor is going to see that whether any event that required for which the condition existed as at the financial statement, or whether is it an event for which condition arose after the date of the financial statement. So these are the example that declaration of insolvency of major debtor. So condition existed as at the balance sheet date, or settling of a legal claim at a reduced amount. Okay? And with respect of the events for which condition arose after the date of financial statement, issue of new share capital, merger, or destruction of substantial inventories due to fire. Okay. Now, subsequent events ko we have divided into as A, B, and C. So, events occurring between the date of financial statement, the date of auditor's report, events, facts that which became known to the auditor after the date of the auditor's report and before the date of financial statements are issued, and facts that become known to the auditor after the financial statements have been issued. So with respect to A, there is a responsibility on the auditor to obtain sufficient appropriate audit evidence. The objective is to obtain sufficient appropriate audit evidence, whether the events that require adjustment or disclosure. So AS4 ka understanding yahan lagega na, whether the same has been appropriately reflected on this financial statement. And with respect to events occurring in B and C, auditor will respond appropriately. What is meant by respond appropriately? I hope now it is clear to you, because we have seen the audit procedure with respect to the facts of B and C. Now, this is talking about A. So first of all, auditor is going to perform the audit procedures. Auditor shall perform the audit procedures in order to see that whether all such events have been identified, right? And when he is performing such procedures, he is going to take into account the auditor's risk assessment in determining the nature, timing of such audit procedures. And what are such audit procedures? So it can be obtaining understanding of the procedures of management, then inquiring of management whether, and those charged with governance, whether such subsequent events that have occurred might affect the financial statement, and then reading the minutes, and if minutes are not available, inquiring management and reading the latest subsequent interim financial statement. Accounting records like budgets वगैरह से भी auditor may take the information. Now, if the auditor identifies the events, what will auditor do? Auditor shall determine whether this event has been appropriately reflected in the books of accounts. And last but not the least, he is going to take WR in terms of SA 580. Okay, clear that all such events that were required to be adjusted or disclosed in the financial statement have been done according to the applicable FRF. Clear? Clear. What is meant by date of financial statements are issued? So see, there are 4 points. You may get a 3-mark question here. So first point is what? The date that the audit report and the audited financial statements are made available to third parties. The second point, it generally depends upon the regulatory environment. The third point is that it can be the date when the financial statements are issued, thereby filed with the regulatory authority. Okay? And the 4 point says that the audited financial statement cannot be issued without a audit report. So the date the audited financial statements are issued must be at or later than the date of audit report, and in fact at or later than the date when the same are when the audit report is provided to the entity. Clear? Now, with respect to the events, the facts happening in B time period, first of all, there is no obligation. But agar aisa hai, and had it been known to the auditor, it may have caused the auditor to amend the audit report. See, this is the language that you are going to use. That had it been known to the auditor at the date of auditor's report, it may have caused the auditor to amend, it may have caused the auditor to amend the auditor's report. Then discuss, determine, inquire. Discuss the matter with the management, and where appropriate, those charged with governance, determine whether the financial statement needs to be amended, and if so, inquire the management how management tends to address the matter. There can be 2 situations, whether management amends and whether management does not amend. If management does not amend, 2 points are there. What is that? SA 705 के according modify, because अभी तो the auditor is going to what? He is going to modify the opinion, right? The audit report and then he is going to if the audit report has already been provided to the to the management, he'll notify the management that please do not issue. And if still management issues, then he'll take appropriate action to seek to prevent reliance on the auditor's report. Okay. Now, the first situation is what? If management amends the financial statement. So first and foremost, carry out the audit procedure with respect to that particular amendment. But अगर management entire financial statements को amend करता है, then extend your audit procedures to the new audit report and provide a new audit report with respect to the amended financial statement. And the new audit report cannot be dated earlier than the date of approval of the amended financial statement. And if the amendment in the financial statement is restricted to that particular subsequent event only, then two options are available. Whatever option is there, auditor is going to mention there that my audit procedure restrict to that particular amendment only. So what can be two options? First is what dual dating, that is included additional date, restricting it to the amendment, indicating that audit procedures on subsequent events are restricted solely to that amendment of the financial statement described in the relevant notes to the financial statement. Or if you're providing a new or amended audit report, include EOM, emphasis of matter or other matter paragraph. वहां पर भी draw the user's attention that my procedure are restricted to this particular amendment only. Clear? With respect to the facts that became known to the auditor after the date the financial statements are issued, that is in the time period C. First of foremost, no obligation. But had it been known to the auditor, it may have caused auditor to amend the auditor's report, then discuss, determine, and inquire. And apart from the above steps, review the steps that the management has taken to ensure that anyone in receipt of the previously issued financial statement together with the auditor's report, they are been informed of such situation. Tell me, is it clear? You may go through these summaries. These summaries overviews also beautifully summarizes the entire essay. Quickly send in your replies whether whatever we have done, in fact, we have done the entire essay 560, whether it is clear or not. So this is with respect to the A time period. This is with respect to B. And this is with respect to C. So between B and C, what is the difference? Reviewing of these steps. Okay. Now, read this test your understanding one, and meanwhile, I'll just have a look at your queries. So, Om Krishnan Gupta is saying it is clear. Amrit Chaudhary is saying clear. Kiran Bala saying clear. Sukaina saying clear. Bhumika, Swati, others also please reply. Bhumika saying clear. Swati saying clear. Surbhi saying clear. That's good. Sneha is saying clear. So I can see new names today. Sneha, Surbhi. Surbhi was there in the last session also. So read this test your understanding one. CA BK Jacob is conducting audit of a company for year 21-22. So basically the date of financial statements is this. The company is engaged in export of ethnic rugs to buyers in Europe. The audit is nearing completion in the month of July. So this is the date of financial statements. However, it becomes known to the auditor that one of the overseas buyer has made a legal claim against the company on 1st June. ठीक है. So अभी तो audit यहाँ पर जुलाई में चल ही रहा है ना. So before that, for injury caused to the customer of one of the European buyer due to substandard dyes used in rugs of one of the lot shipped in August 21. August 21 में यहाँ पर जो ship हुआ, ठीक है. The management of company has decided to agree to an out-of-court settlement of 5 CR to protect its reputation. The financial statements of the company are silent on this issue. Discuss how CAPK Jacob should proceed to deal with the above issue. Do not look at the answers given at the back. Just apply your understanding of this essay and tell me, is it a subsequent event that require adjustment? So Om Krishna Gupta is saying it should be shown in financial statement. If not taken, auditor should mention it in the auditor's report. Amit Singh's SA 560. Okay. Others also please reply. Subsequent event is this is subsequent event. Sneha is saying. Swati, read the question carefully. So, the question says how to proceed with the above issue. Now, let us just, the answer is given on page number 7.57. So, see, students, it is, okay. First, let me just explain this to you. Then we'll see what answer is given. So, see, it is one of the subsequent events, right? And the condition existed as on the balance sheet date. Why? Because it is mentioned that the sale, the lot has been shipped in August 2021. Okay? The sale has happened there, right? And the same will require adjustment. But the financial statement are silent on this issue. So auditor will ask the management to adjust the same in the financial statement. But if the management does not agree, then what is the weapon available? Auditor will consider the impact on the audit report. Now let us just look at the answer that is given on page number 7.57. Okay. So in the given case, the auditor has come to know the legal claim against the company before the audit, before the issue of audit report. It has also come to his knowledge that the management has agreed to an out-of-court settlement of 5 CR. It is an example of subsequent event between the date of financial statement and date of auditor's report. इतना तो clear है? It provides evidence of condition that existed at the balance sheet date and requires adjustment in the financial statement. Why? Because it is mentioned that August 2021 में sale हो गया था. ठीक है? Now, how the auditor should deal with it? He should ask company management to make necessary adjustment to the financial statement. If adjustment is not made by management, he should consider impact on the auditor's report. Simple. देखो ऊपर तो here we have just explained again what is given in the question. हाँ यहाँ पे we have told that this is subsequent event and this requires adjustment because the condition existed as on the balance sheet date. And here we are saying that management co-auditor will ask them to adjust the financial statement. If no, then he'll consider the impact on the auditor's report. Retest your understanding 2 given on page number 7.13. I hope this is clear. This test your understanding 1. Send in your reply, students. 7.13. I'm starting test your understanding 2. Meanwhile, let me just have a look at your queries. Swati, is it clear now? Bhumika correct. Kiran Bala correct. Test your understanding 2 on page number 7.13. CA Chandni Khanna is going to complete audit of a company within next few days. She has performed necessary audit procedures like inquiry of management personnel, reading minutes of meetings held after the date of financial statement, going through books of accounts after date of financial statement to make sure that all subsequent events before signing audit report has been considered by her. So that means she has applied SA 560. Still, she wants to be certain that no such events have been left out. What she should do in such a situation, also discuss the rationale of doing so. Very simple. Quickly tell me, write the 2 words that should come. Yes, Kiran Bala correct. Komalpreet Kaur correct. Others also please reply. Swati correct. Sukanya correct. Sukaina correct. Om Krishna Gupta correct. So students, today's class is really very interesting. You all have made it very interesting. Sneha, correct. So auditor is going to obtain what? Written representation. Now, what is the rationale? What is the, you can say, reasoning behind obtaining written representation? See, unless and until the auditor, C. Chandni Khanna, she obtains written representation, she cannot be sure that all such events have been identified and disclosed. So that is why the option available is what? To obtain written representation. So let us just have a look at the answer given on page number 7.57. So the answer says that the CA has already performed necessary audit procedures like all these things. Now she should request management and where appropriate those charged with governance to provide written representation in terms of SA 580 that all events subsequent to the date of the financial statement for which the applicable FRF requires adjustments or disclosure have been disclosed or adjusted. So you will not just write WR, Hana, you are going to give an explanation also. The rationale. So there were two questions, that what she should do and what is the rationale. So the rationale of obtaining the WR is that even after performing above said procedures, she may not come to know that all subsequent events. Therefore, she may not come to know all subsequent events. Therefore, it is necessary from an auditor's point of view to obtain acknowledgement from management in the form of WR that all such events for which applicable FRF requires adjustment have been duly adjusted or disclosed. Clear? Now give me the final thumbs up for SA 560. Quickly tell me whether it is clear or not. And just a minute, let me just discuss one MCQ also with you relating to this. Read this fourth MCQ. This is on page number 7.56. Do not look at the answer that is given. Just send in your replies. Read the question carefully. Which of the following is not an example of subsequent events? Not an example. Event occurring between the date of financial statement, date of auditor's report. Event occurring on date of financial statements. Event occurring after filing audit report with tax authorities. Had such event been known earlier, auditor would have amended the report. Events occurring during course of performing audit procedures after date of financial statements. Send in your replies. Which of the following is not a subsequent event? Check your answers, students. So, Surbhi, check your answer. Kiran Bala, check your answer. Rest all are correct. Kiran Bala and Surbhi, do not look at the answers given in the module. Read the question again and then send your answers. So see, which of the following is not an example. So events occurring between the date of financial statement and date of audit report, this is a subsequent event. A wala point, this is event occurring on the date of financial statement. This is not a subsequent event. Event occurring after filing audit report with tax authorities. Had such event been known earlier, auditor would have amended the report. That is events occurring after the date the financial statements are issued. So this is C. Events occurring during the course of performing audit procedure after date of financial statement. So after the date of financial statement and before the date, again, this is talking about B. Hana? Sorry, A. This is talking about time period A. So the answer is events occurring on date of financial statement. See, if the events are occurring on the date of financial statement, तो adjustment तो हो ही जाएगा ना, 31st March को हो रहा है तो. Is it clear? Is it clear? Surbhi, now you are correct. Quickly send in your replies. 560 समझ आया है? बहुत सिंपल है. Just try to visualize or, create a flow chart in your mind that first of all, you have studied that what are subsequent events. A tha, then second category, which is divided into B and C. Then you saw that events existed as on the balance sheet, condition existed as on the balance sheet date that may require adjustments, and events that conditions arose after the date of financial statements. ठीक है? Then we did A में अगर कुछ है, then auditor needs to obtain sufficient appropriate audit evidence that all such events have been duly reflected or disclosed. This is one of the objective. And with respect to the facts, after the date the auditor's report are issued, auditor will respond appropriately. With respect to the events, what audit procedures auditor is going to perform that have happened before, after the date of financial statement, but before the date of audit report. First of all, perform the audit procedures, whether such events have been identified. Consider the risk assessment. While performing such audit procedures में क्या था? Obtain understanding of the management procedure. Inquire management and those charged with governance whether such events affect the financial statement. Remember, are you able to recall all such points? Read the minutes not available, inquire. Read the latest interim financial statement. Read the records also. And if such events are identified, then auditor is going to make sure, determine whether such events have been appropriately accounted for. Clear? This was with respect to A. With respect to B, no obligation. So as such, B and C, no obligation. But if any event have come to the knowledge, it may have caused the auditor to amend the auditor's report, then auditor will discuss it with the management or those charged with governance, determine whether such event fact require any adjustments, any amendment, and if yes, then inquire how management intends to address. Then what are the audit procedures? First of all, carry out the procedure restricted to that amendment and extend the procedures to the amended financial statements, to the new auditor's report, and provide new auditor's report on the amended financial statement if the management issues the broad financial statements. If the amendment in the financial statement is restricted to that particular subsequent event, two options are available. Amend the audit report to include additional date and mention there that the amendment is restricted to the subsequent event only. If you're providing new or amended audit report, EOM, OM paragraph में mention this fact. If management does not amend, SA 705 में modify कर सकते हो. Otherwise, SA 705 में auditor needs to amend and ask management not to issue such financial statement. If still they are issued, then take appropriate action to prevent reliance on the auditor's report. With respect to C period, all steps are same except for one more step, that is review the steps that the management has taken to ensure that anyone in receipt of the previously issued financial statement along with the auditor's report thereon they are informed. Right? That's it. Is it clear? Is it clear? Now, the next essay that we are going to start is essay 570. So I'll just give you a brief about this essay 570, and then after the break, we'll discuss this in detail. So see, going concern is a fundamental accounting assumption. So whenever the financial statements are prepared, this is one of the assumption that the financial statements are prepared on going concern assumption, going concern basis. Okay. So what is meant by that? It basically means that the entity is going to continue its business for the foreseeable future, and that the enterprise has neither the intention nor the necessity of liquidation or curtailing materially the scale of its operation. Okay. So general purpose financial statements are prepared using GC, going concern basis of accounting, unless management intends to liquidate the entity or to cease operation or has no realistic alternative. So why is going concern important for an auditor? Because see, financial statements, when they are prepared based on the going concern. And if the going concern assumption is not satisfied, the financial statement may be prepared on liquidation basis if the management has the intention to liquidate. So whether the financial statement have been prepared on the appropriate basis is of utmost importance for the auditor also. So when the use of going concern basis of accounting is appropriate, assets and liabilities are recorded on the basis that entity will be able to realize its assets and discharge its liability in the normal course of business. When an enterprise is not viewed as going concern, the financial statements are prepared on liquidation basis. For example, inventories may need to be written down as they may be sold at a lower price. Assets may have to be recorded at the prices they are likely to fetch, right? So that is why there is a separate essay 570, which deals with the auditor's responsibility with respect to going concern and the implications on the auditor's report. So essay 570, the name is what? Going concern. And it deals with the auditor's responsibility in audit of financial statement relating to going concern and the implications for the auditor's report. So it is basically divided into two parts. First is what is the auditor's responsibility relating to the going concern. And secondly, what are the implications on the auditor's report? So tell me, first and foremost, it is whose responsibility to assess whether going concern is appropriate or not. So whether it is the management, so Swati has already answered it, or is it the auditor? So Swati, Komalpreet, Om Prakash, absolutely correct. It is the management. Because management is preparing the financial statement. Now. So first and foremost, the management is going to see whether the financial statements can be prepared based on going concern, right? And then the auditor is going to see whether the management's use of going concern assumption is appropriate or not. So what is the responsibility of the auditor? To see whether the management's use of uh, going concern basis is appropriate or not. Clear? Okay. Then, students, quickly tell me, are you aware about going concern concept? And are you aware about the various factors that may that may cause significant doubt on the entity's ability to continue as a going concern, financial factors, operating factors, and others? So just write factors and yes, if you are aware about the factors. Give me responses for factors also. Just write factor and yes, ठीक है. So we'll do okay. So many, in fact, all of you are saying yes, you all have done going concern assumption basis and you all are clear about the factors also. So here we will do one thing. Students, see today my uh, motive is to cover three essays. Essay 560 we have already covered, essay 570 we are going to cover, and then essay 450, depending upon the time. But still, I really want to cover three essays. So we'll do one thing after the break, after a quick break of 10 minutes, we will meet and we'll start with essay 570 and then with essay 450, which is also another important essay. So let us take a quick break of 10 minutes. Okay. We're back after the break. So we were doing essay 570 going concern, and you all have told me that it is the management's primary responsibility to assess the entity's ability to continue as a going concern. So what is the responsibility of the auditor? Auditor will assess the appropriateness of the management's use of going concern basis. Okay. So see, when the management assesses the entity's ability to continue as a going concern, it involves judgment. Management will apply its judgment in order to determine whether the entity can continue its business for the foreseeable future. So, when the management is applying the judgment, various factors are to be considered, right? So, students, first and foremost, see, going concern is whether the company entity is able to continue its business for the foreseeable future, and we take future 12 months, right? So the degree of uncertainty increases the further in future the event, condition, or outcome occurs. So the further the event occurs, the condition occurs, the degree of uncertainty also increases. Also, the management is going to consider the size, complexity of the entity, the nature or condition of the business, the degree to which it is affected by the external factors. So let's say the company is there and it is into imports and export, and it is highly affected by the import export policies or the government rules and regulations with respect to imports and exports, right? The information available at the time at which judgment is made and subsequent events. So it might be possible that when the management made the judgment, let's say that the going concern is appropriate. At that time, the going concern was appropriate. But subsequently, let's say after a week only, there was a ban on the import and export of the goods in which the company is dealing. So thereby leading to a danger to the going concern. So subsequent events and the can have an impact on the management's judgment about the going concern. So this we are talking about what? Management's responsibility. So it says that the following factors are relevant to the judgment by management. So the degree of uncertainty associated with the outcome of condition event increases significantly the further into the future an event or condition or outcome occurs. The size or complexity of the entity, nature, condition of the business, and the degree to which it is affected by the external factors affect the judgment regarding the outcome of the event or condition. And any judgment about the future is based on the information available at the time at which judgment is made. Subsequent events may result in outcomes that were inconsistent with the judgments that were reasonable at the time when they were made. Is it clear? Then what is the responsibility of the auditor? So the responsibility of the auditor is to make specific assessment of the entity's ability to continue as a going concern and to make this is with respect to management's responsibility to make specific assessment of entity's ability to continue as a going concern and to make appropriate disclosure. Now, what is the responsibility of the auditor then? Auditor is going to operate to obtain sufficient and appropriate audit evidence whether the management use of going concern is appropriate or not, right? So to obtain sufficient appropriate audit evidence with respect to appropriateness of management's use of going concern. Further, auditor has a responsibility to assess whether a material uncertainty exists that may cast a significant limitations to audit. This line about the entity's ability to continue as a going concern in an auditor's report cannot be viewed as a guarantee as to entity's ability to continue as a going concern. See, if it is not mentioned, there is absence of any reference to material uncertainty. It will not mean that auditor is giving a guarantee with respect to going concern. Why? Because future events may, there is one of the inherent limitation of what? The unpredictability of the future events when the auditor is conducting the audit. Right? So the absence of any reference to material and uncertainty about entity's ability to continue as a going concern cannot be viewed as a guarantee by the auditor that company will continue as a going concern. Is it clear? So what are the objectives of the auditor? So the objectives of the auditor are to obtain sufficient appropriate audit evidence regarding and to conclude on the appropriateness of management's use of going concern. These are almost the same as we have done the responsibilities. To conclude, based on the audit evidence obtained, whether a material uncertainty exists relating to events and conditions that may cause significant doubt on the entity's ability to continue as a going concern and to report in accordance with SA. So almost the same, the way we have done the responsibility. Is it clear? So abhi tak we have seen responsibility of the management mein judgment ke what are the various factors. Then we saw what are the responsibilities of the auditor and the objectives of the auditor in terms of SA 560. I hope whatever we have done is clear to you. Now, when the auditor performs risk assessment procedure without looking at identifying and assessing the risk of material misstatement through understanding the entity and its environment. So that is when the auditor is performing the risk assessment procedures and the relating activities. So at that time, auditor considers whether the events or condition exist that may cause significant doubt on the entity's ability to continue as a going concern. See, this is a very important line. You will see it. This line is repeated again and again in this essay. So you should devote certain time to learn this line. Auditor to consider whether events condition exists that may cause significant doubt on the entity's ability to continue as a going concern, right? Now, here when the auditor is performing the risk assessment procedure, auditor will see whether management has already performed such preliminary assessment or not. If yes, if management has performed, auditor will discuss such assessment with the management. Auditor is going to discuss the preliminary assessment with the management. And auditor will ask the management, inquire the management whether management identifies such events or condition that may cause significant doubt on the entity's ability to continue as a going concern. And if there are certain conditions that has been identified, what are the management's plan to address them? Clear? However, if management has not yet performed such assessment, then auditor is going to discuss with management then how have you considered the basis how have you used the going concern as the basis for your preparation of financial statement, right? And inquire the management whether they have identified such events or condition. Clear? Let me just take you through the module for this point. So we are doing the risk assessment procedures. So it says that when performing risk assessment procedures as required by SA 315, auditor shall consider whether events conditions exist that may cause significant doubt on the entity's ability to continue as a going concern. In doing so, auditor shall determine whether management has already performed a preliminary assessment of entity's ability to continue as a going concern, and if such assessment has been performed, if such assessment has not been performed. So if such assessment has been performed, auditor shall discuss the assessment with management, determine whether management has identified the events individually or collectively that may cause significant doubt on the entity's ability to continue as a going concern, and if so, then what are the management plans to address them. If such assessment has not yet been performed, auditor shall discuss with management the basis for intended use of going concern. That is how management आपने तो assess ही नहीं किया, then how you are using the going concern basis of accounting, and inquire of management whether any condition or event exists that may cause significant doubt on the entity's ability to continue as a going concern. And the auditor is going to remain alert to all such events and conditions that may cause significant doubt on the entity's ability to continue as a going concern. And what are those events and conditions that may cause significant doubt on the entity's ability to continue as a going concern? So these can be financial events or conditions, these can be operating events or conditions, and these can be other events or conditions. Okay, so financial. So when let's say auditor is going through the financials of the financial statements of the last year, and auditor finds that let's say during the year also there are adverse key financial ratios, or the net liability, your current asset minus current liability is a negative figure, right? Or there are negative operating cash flows, right? So this is what an indication that there is significant doubt on the entity's ability to continue as a going concern. Or let's say with respect to creditors, 3 points are given. So the creditors have withdrawn the financial support from the entity, or there is inability to pay the creditors on the due date, or the creditors have changed the payment from credit to cash on delivery transactions. So this also implies that there is significant doubt on the entity's ability to continue as a going concern. Okay, so you may go through all these points as homework, because you all are saying that you have done all these things, all these points in your accounts. So operating can be management intention to liquidate the entity or cease operations, loss of key management without replacement, loss of major market key customer, franchisee, license or supplier, labor difficulty, shortages of important supplies. So let's say while the auditor was performing RAP, he found that certain strikes by the frequent strikes, when discussing with the management, auditor becomes aware that certain frequent strikes by the labor has been there. Or let's say that there has been an ban on the import from the country from where the company was importing. Let's say from Korea, the company used to import, and now after discussing with the management, the auditor becomes aware that there has been a ban on the import of raw material from Korea. So this is an indication, right? Or emergence of highly successful competitor, and others can be non-compliance with capital or statutory requirements, pending legal or regulatory proceedings which are the company is unlikely to be able to satisfy, changes in law and regulation expected to adversely affect the entity, uninsured or underinsured catastrophe is your disasters. So disasters so aate hain, but if these are underinsured or uninsured, so auditor, this is an indication that there is a significant doubt on the entity's ability to continue as a going concern. So basically, the auditor is going to evaluate the management's assessment of entity's ability to continue as a going concern. Read this paragraph as a homework. Here, I'd like to explain you one paragraph here. See, in evaluating the management's assessment of entity's ability to continue as a going concern, the auditor shall cover the same period as that used by the auditor in making the assessment as per the applicable FRF, and the time period is what, 12 months. But if the management's assessment of entity's ability to continue as a going concern cover less than 12 months from the date of financial statement, the auditor shall request the management to extend the assessment period to at least 12 months. Simple है ये तो, ठीक है. Now, if the conditions are identified, so this we have seen. Now, if the conditions or events are identified that may cause significant doubt on the entity's ability to continue as a going concern, auditor will perform what? Additional audit procedures. Okay? So, additional audit procedures to obtain sufficient appropriate audit evidence. And he'll also consider mitigating factors. So if you remember, I gave you example that Korea, say the company used to import all the raw materials, and there has been a ban on the import from Korea. But let's say the company says, the management says that we are already aware that there has been a ban on the imports from Korea, from where our company used to import all our raw material. And we have already started working on this. We have already asked for quotations from, let's say, some other countries. From, let's say, it says that from South Africa, we have already obtained the quotations from various suppliers. So this is a mitigating factor. It is nullifying the effect of this ban. So consider the effect of the mitigating factors also. Okay? So what audit procedures the auditor will perform? First of all, auditor is going to request the management to make its assessment relating to entity's ability to continue as a going concern. Even after identifying that event or condition, auditor requests the management that, see, now that event or condition has been identified, we have considered the mitigating factor also. Now you again consider the entity's ability to assess the entity's ability to continue as a going concern. Okay? And auditor will evaluate the management's plan of future actions. So auditor will ask the management that, please give me your plan of future action, and auditor is going to evaluate that, right? Analyze the cash flow forecast of the entity. See, yahan par, when we were doing the financial indicators, so it was what? Net current liability position. One, huh. ठीक है. Negative operating cash flows indicated by historical or prospective financial statements, right? So substantial operating losses in the value of assets that are used to generate cash flows, right? And then it says that inability to obtain financing essential new product development or other essential investments. So auditor now, when the event or condition has been identified, auditor is first of all requesting the management to make its assessment of entity's ability to continue as a going concern, evaluate the management's future plan of action, and analyze the cash flow forecast of the entity. So you may get a question that so and so factors have been analyzed. What are the audit procedures? So we'll say additional audit procedures करने हैं, mitigating factors को consider करना है, and to perform all these things. Then when the auditor obtains the cash flow forecast, auditor will evaluate the reliability of underlying data. See, forecast hai na, whether the data that has been used to develop such forecast, whether that is reliable, and whether the assumptions that are used by the management, whether these are adequate or not. Then considering the additional facts or information available. So whatever additional facts and information are available, and last but not the least, obtaining the WR. So requesting the written representation from management regarding the plans of future actions and the feasibility of these plans. So these are very important. It can form a very good 4-mark question. That such and such conditions are. So you may be given a question that the labor is going on strike, the company is not having alternate source of raw material, so and so key personnel has left the organization, so various factors. So what are the audit procedures? So auditor is going to obtain sufficient appropriate audit evidence through performing the additional audit procedures after considering the mitigating factors. So what are those audit procedures? Requesting the management to make it assessment relating to entity's ability to continue as a going concern, evaluating the management's plan of future actions, analyzing the cash flow forecast of the entity, and while analyzing the cash flow forecast, auditor is going to evaluate the reliability of underlying data and determine whether there is adequate support for the assumption, considering the additional facts or information available, and requesting WR from management regarding the plans of future actions and feasibility of these plans. Is it clear? Is it clear? Now the next topic says that, see, these are various examples of audit procedures when events or conditions have been identified that may cast significant doubt on the entity's ability to continue as a going concern. So here we were saying that auditor will perform additional audit procedures. So what are those audit procedures? These are given here. We are on page number 7.20. So examples of audit procedures where events and conditions have been identified that may cast significant doubt on the entity's ability to continue as a going concern. So see, simple, analyze or discuss the cash flow, profit or other relevant forecasts with management. Analyze, discuss the entity's latest interim financial statement. Reading the terms of debentures, loan agreements, determining whether these have been breached. Reading minutes of the meeting of shareholders, those charged with governance relevant committees for reference of financing difficulties, right? So basically, whatever events and conditions have been identified relating to those only, the auditor is performing certain audit procedures. Okay? Inquiring the entity's legal counsel regarding existence of litigation claims, reasonableness of management assessment. Confirming existence, legality, enforcement of arrangements to maintain financial support with related and third parties. Evaluating the entity's plan to deal with unfilled customer orders. Performing audit procedure regarding subsequent events, whether mitigate or otherwise affect the entity's ability to continue as a going concern. Confirming the existing terms adequacy of borrowing facilities. Obtaining reviewing reports of regulatory actions. Adequacy of planned disposal of assets. So this is basically whatever were the indicators. For that only auditor is further. Okay? Is it clear? Okay? Now this was one part. Now the other part comes about auditor's conclusion and the impact on the audit report. So what will be the auditor's conclusion? So auditor is going to evaluate whether sufficient appropriate audit evidence has been obtained to conclude about the appropriateness of management's use of going concern. And based on the audit evidence, auditor will consider whether material uncertainty exists. So whatever audit procedures auditor has performed, we have discussed. Now, what conclusion auditor will draw? So first of all, auditor will evaluate whether he has obtained sufficient appropriate audit evidence to conclude about the appropriateness of management use of going concern. This was the first objective only, if you remember. So auditor will see whether first objective has been met. And based on the audit evidence, he'll conclude whether material uncertainty hai ya nahi. And this was the second objective, if you remember. Let me just show it to you. Objectives. So पहला क्या था? Management's use of going concern, whether it is appropriate and whether material uncertainty exists. So auditor is going to conclude that only, na, that whether I have achieved the objective or not. Simple. Now, what is meant by material uncertainty is also given by SA 570. It is given in your module. So it says that material uncertainty exists when the magnitude of the potential impact and likelihood of occurrence. So two things, that the magnitude, the extent of the potential is likely because uncertain hai na abhi, impact, and the likelihood of occurrence, the probability whether this will happen or not, is such that in the auditor's judgment, appropriate disclosure of the nature and implications of the uncertainty is necessary. So again, material uncertainty hai nahi. Materiality, again, it is what? It is a matter of what? Auditor's judgment. So two things auditor is going to see: magnitude of potential impact and likelihood of occurrence is in the auditor's judgment is such that appropriate disclosure of the nature and implication of uncertainty is necessary. Is it clear? Okay. Now comes the next part, which is implications for the auditor's report. But before starting with this, please let me know whether whatever we have done in SA 570 so far, whether it is clear or not. Implications, I assure you that this, after the discussion that we will be having just now, you are going to find it very easy. But before that, please let me know jitna bhi humne kiya hai, whether it is clear or not. So Kiran Bala, Om Krishna Gupta, Swati are saying clear. Others also please reply. Bhumika saying clear. Others please reply. ठीक है, अभी तक हमने क्या पढ़ा? Just a minute. ठीक है. So if you just have a look at the module, we have seen that going concern kya hota hai and what is the responsibility of the management, and when the audit management is applying the judgment, there are various factors that the management has to consider. Responsibility of the auditor and objectives are almost the same, which says that to obtain sufficient appropriate audit evidence about the appropriateness of management use of going concern and whether events and conditions hai that cast significant doubt on the materiality, uncertainty hai ya nahi, that cast significant doubt on the entity's ability to continue as the going concern and to report. So our reporting part is left. Risk assessment procedures and related activities may we have seen that auditor will see whether preliminary assessment has been done by the management. If yes, discuss करना है management के plans क्या है ये देखना है. If no, then ask management the basis of the intended use of going concern and whether events condition exist. And he'll remain alert to the various events conditions which are financial, operating and others. Evaluate करना है management का assessment, and here I have given this to you as homework. Additional audit procedures may we have seen if events and conditions have been identified. So auditors shall obtain sufficient appropriate audit evidence in order to whether or not material and uncertainty exists. How? By performing the additional audit procedures, and he'll also consider what mitigating factors. So whether management has not yet performed, ask the management to perform the assessment. Future plan of action kya hai? Prepare cash flow, ask the management to prepare cash flow, evaluate the reliability of underlying data, determine whether adequate support for the assumptions. Additional facts or information that has become known to the auditor since the date of the management has made its assessment, and requesting the WR. And what are the various examples of audit procedures? This we all have seen. Conclusion we all have seen. This paragraph also, it is just a repetition. You can do it as a homework. Now, the next topic is what? Implications for the auditor's report. ठीक है. Now, if I ask you a question, do not look at the module, please. Tell me if the going concern basis. So first objective was whether the auditor needs to obtain sufficient appropriate audit evidence with respect to appropriateness of management's use of going concern. So let's say the going concern is inappropriate. You all must have an understanding about the various types of audit report, na? The various types of audit opinion. Tell me, if the going concern is inappropriate, tell me what should be the opinion. It should be adverse, qualified, or disclaimer. Quickly send in your replies. So Om Krishna Gupta is saying adverse. Others also please reply. Swati is saying adverse, which is absolutely correct. See, disclaimer क्यों होगा? यहाँ पर तो it is inappropriate ना, going concern basis is inappropriate when the auditor was performing the various audit procedures. The first objective was what? To see the appropriateness of management use of going concern. So if that is inappropriate, everything is wrong now. So auditor will give adverse opinion. One of the student has written disclaimer. See, auditor gives disclaimer of opinion when he is unable to obtain sufficient appropriate audit evidence. But here, if the auditor has obtained sufficient appropriate audit evidence that going concern is inappropriate, then the adverse opinion will come na, that everything is wrong in the financial statement. Why? Because it should have been prepared based on your liquidation basis. However, the financial statement has been prepared on going concern basis. So Komalpreet, is it clear? Kiran Bala, Bhumika are saying adverse, which is correct. Swati, Om Krishna Gupta is saying adverse. Okay? So when the going concern basis is inappropriate, auditor is going to give an adverse opinion. Simple. Now the going concern basis is appropriate. That is, financial statement should have been based on the should have been prepared based on going concern basis, which is appropriate, right? However, a material uncertainty exists. That is, event or condition exist. Okay? That may cast significant doubt on the entity's ability to continue as a going concern. However, going concern correct hai. Okay? Now there can be two situations. First, when adequate disclosure in the financial statement has been made, and when adequate disclosure in the financial statement has not been made. So if adequate disclosure has been made, going concern is appropriate, though material uncertainty is there with respect to which adequate disclosure in financial statement is made, auditor will give an unmodified opinion. Opinion थोड़ी ना modify करेंगे. Why? Because going concern is appropriate. Material uncertainty is there, but the same has been disclosed. So auditor is going to give a clean report, that is unmodified report. But auditor will include a separate section by the name of material uncertainty relating to going concern. See, it will come in full, right? I have written it as short form. Material uncertainty relating to going concern. So going concern is appropriate. Material uncertainty exists, but the same is disclosed in the financial statement. So auditor will give unmodified opinion. But see, auditor also wants to draw the attention of the users of the audit report or the audited financial statement that, see, there is a note in the financial statement which says material uncertainty exists. So how? By adding a separate section in the audit report, and the heading will be material uncertainty relating to going concern, to draw the attention of the users of the financial statement to the note in the financial statement. We have seen now that the adequate disclosure is there. It will be in the form of note. So auditor is going to mention in that paragraph that, see, it is mentioned in that note. Further, auditor is going to state that material uncertainty exists, but the opinion is not modified with respect to that particular material uncertainty. Why? Because the disclosure has been made in the particular note. Simple. So what we have done, that going concern is appropriate, material uncertainty exists, but adequate disclosure has been made in the financial statement. So auditor will give an unmodified, and modified is what? Clean report, plus a separate section by the heading material uncertainty relating to going concern, to draw the attention of the users to the note in the financial statement. And auditor is going to state that material uncertainty exists and our opinion is not modified with respect to this material uncertainty. Okay? Now the second situation can be where going concern is appropriate. Material uncertainty exists, but there is no adequate disclosure with respect to that material uncertainty in the financial statement. So now auditor cannot give unmodified opinion. Why? Because disclosure was required, which has not been made. So depending upon its pervasiveness in materiality, auditor is going to give either the qualified opinion or adverse opinion in terms of SA 705. Qualified or adverse. So I'm assuming that you are a little bit aware about all these kinds of opinion. Plus, in the basis of for qualified or adverse opinion section, auditor is going to mention that material uncertainty exists, and auditor is also going to mention that financial statement do not adequately disclose such material uncertainty. So I'll repeat it, that when going concern basis is appropriate, material uncertainty exists, but adequate disclosure is not made in the financial statement, auditor will give qualified or adverse opinion in terms of SA 705. And in the basis for qualified adverse opinion section, auditor is going to state that material uncertainty exists and the financial statement do not adequately disclose such material uncertainty. So abhi tak we have done 2 points, that is going concern inappropriate hai, straightforward adverse opinion. Going concern appropriate hai, material uncertainty hai, adequate disclosure is there. Unmodified opinion, separate section by the paragraph, material uncertainty related to going concern mein, draw attention to the note in the financial statement and state that material uncertainty exists, but the opinion is not modified with respect to such material uncertainty. Going concern appropriate, material uncertainty exists, but adequate disclosure is not there. Give qualified or disclaimer in terms of SA 705 in the basis for qualified adverse opinion section. State that material uncertainty exists and financial statement do not adequately disclose that. Right? Last, when the management is unwilling to make or extend its assessment. So management is not willing to make any assessment about going concern or extend its assessment, then auditor will give what? Qualified or disclaimer of opinion. Why? Because here it is not possible for the auditor to obtain sufficient appropriate audit evidence regarding the going concern. So when it is the situation when the auditor is not able to obtain the sufficient appropriate audit evidence, then depending upon the materiality and the pervasiveness, it can be qualified or disclaimer. In terms of SA 705. Other aspects with respect to qualified adverse disclaimer opinion, we will be doing when we will do chapter number 8. So with this, we have covered SA 570. Quickly tell me whether the entire essay is clear or not. I have tried to simplify this implication for auditor's report. So first of all, tell me whether you are able to understand and learn this implications for audit report. Quickly send in your replies. Quickly send in your replies. So Om Krishna Gupta, Kiran Bala, Swati are saying clear. Others also please reply. Sneha, Komalpreet. Bhumika is saying clear. Komalpreet saying clear. Sneha saying clear. Amrit Chaudhary, please reply. Swati, please reply. Surbhi, please reply. Right? So let us just... so these are the implications. I hope it is clear to you. Now let us just do this test your understanding 3. This is given on page number 7.23. Quickly read this. Then I will definitely start with essay 450 today itself. Read this question. So during course of audit of a company, CA Varun Agarwal notices that company is facing significant skilled labor shortages resulting in hampering of operations of company. The company's manufacturing is depending upon skilled labor coming from villages in certain districts of eastern UP. However, due to job opportunities available near villages now, many are not interested in going out from their native villages. Such a situation has led to company not being able to keep its commitment, losing out on orders and fall in its revenue. Fixed cost of the company remain at a high level. As a result, company is facing a liquidity crunch and is not able to pay its creditors on time. The bankers of companies are also not willing to help the company to tide over liquidity crisis. The auditor is having doubt over going concern status of the company. See, how should management of the company try to address the auditor's concern? This is the first part. What audit procedures may be performed by auditor in such a situation? Quickly send in your replies. Just send the keywords. Quickly send in your replies. I have received reply from Swati. Others also please reply. Other Bhumika and Swati has replied. Others please reply. See here. Om Krishna Gupta correct. Swati correct. Sneha is asking me to explain the question. Okay. Here, see, it says that during the year course of audit, auditor finds that all these things have happened. What all these things? Like it says that the work of the company depends upon availability of skilled labor, and now that skilled labor is not available. Because of this, the company is not able to keep its commitment, losing out on orders, and there is fall in revenue, and fixed cost is remaining at a same level. Liquidity crunch hai. Company is not able to pay to the creditors on time. Bankers are not willing to help the company to tide over this liquidity crisis. And the auditor is having a doubt over the going concern status of the company. Now, students and Sneha specifically, she has asked me to explain the questions. Just look at these indicators, these events or conditions. So many of the events and conditions that are given, see, an inability to pay to the creditors, inability to obtain financing, okay? Then labor difficulties. Okay. So all these points are what indication, events and condition that cast a significant doubt on the entity's ability to continue as a going concern. Okay. Now such events have been identified. Okay. What are the audit procedures the auditor is going to perform? So this topic, additional audit procedure when events and conditions are identified. So events conditions identify ho gaye hain. So what audit procedures? After considering mitigating factor, auditor will ask the management to perform the assessment. Management के future plan क्या है? Cash flow क्या है? So all these steps are going to come. ठीक है? Clear है? Is it clear? Sneha, are you able to understand the question? Abhi we have just understood the question. ठीक है? Sneha, please reply. So the question it has asked for, what are the two requirements? It says that how should management of the company try to address the auditor's concern? What audit procedures may be performed by auditor in such a situation? Okay. So Sneha is saying it is clear. Okay. So now, see, significant shortage of skilled labor, in an inability to pay creditors on time, overall liquidity crisis faced are all examples of events condition that individually, collectively may cast significant doubt on the entity's ability to continue as a going concern. I have told you this line is important, will be used again and again in this essay 570. See, in such a situation, तो two things were asked, management को क्या करना है and auditor को क्या करना है. So in such a situation, management should try to address auditor's concern by preparing its future plan of action. This was the first point, if you remember, including preparation of cash flow forecast showing inflow outflow of cash. Such a cash flow forecast should address the auditor's concern regarding liquidity crisis being faced by the company. So this was the first part of the question. Then auditor should perform audit procedure to evaluate. Ab cash flow forecast mil gaya. What will auditor do? Evaluate the reliability of underlying data to prepare the forecast and determine whether there is adequate support for the assumptions. The point from that only, The auditor should also consider whether additional facts or information have become known since the management has made its assessment. Is it clear? Are you able to understand how to write the answer? So it is the answer. See, the question has asked you two things. So the answer will be given in two parts only. Management को क्या करना है and then auditor को क्या करना है. And if you can see from those 4 points, 4 or 5 points only, the two parts have been made. So is it clear? Kiran Bala, Sneha, Bhumika, Om Krishna Gupta are saying it is clear. Others also please reply. Can we start with the next essay, which is essay 450? Om Krishna Gupta is saying clear. Others also please reply. Good. Now let us start with essay 450. We are on page number 7.23. Just a minute. So evaluation of misstatements identified during the audit, right? So when I was explaining you at the very beginning as to what is contained in this chapter, I told you that when during the course of audit, so Swati, no, or just Swati is saying, can we also mention about risk assessment procedures? See, here we are saying that the events and conditions have been identified. And there is a specific topic, see. You can write about written representation. So this is the specific topic that events and conditions have been identified, right? So that is why we are saying that if management has not performed, ask the management to perform the assessment. Management will prepare what? Future plan of action. Management will prepare cash flow forecast. Auditor will see whether it is reliable and the underlying data is reliable. Auditor will see whether there is adequate support of assumption or not, and whether any additional fact has been there. Yes, written representation you can mention. ठीक है स्वाति? So let us start with the next essay, which is essay 450, evaluation of misstatement identified during the audit. So we were discussing that when we started this chapter, I told you that during the audit, during the course of audit, a number of misstatement might have been identified by the auditor. Auditor keeps on accumulating such misstatement, and on timely basis, auditor also apprise the management, tells the management that see, these are the misstatement and please correct them. Situations can be when management corrects those misstatements, when management does not correct those misstatements. So what is the course of action available to the auditor? What is a material misstatement? All this thing we are going to consider. Okay? And when we talk about misstatement, so as an auditor, we all have done essay 320. So as an auditor, we have to see whether the effect of the misstatement in the on the financial statement as a whole, whether it is material or not. So material misstatements we will be considering, right? So the name is evaluation of misstatements identifying during the audit. Now, before forming the opinion, auditor will evaluate the effects of identified misstatements on audit, uncorrected misstatement on financial statement after consideration of materiality. Students, Please understand this very carefully. Why? Because this same thing will come in auditor's responsibility as well as in auditor's objective, right? So before forming any opinion on the financial statement, auditor shall evaluate the effects of two things: identified misstatements on audit, the misstatements that the auditor has identified, the effect of such identified misstatements on audit, that is whether there can be more misstatements. So we are saying on audit, the misstatements that he has identified, evaluating the effect of such identified misstatement on the audit process, and uncorrected misstatement. So I told you that during the course of audit, whenever auditor finds misstatement, auditor will ask the management to correct it. So if any uncorrected misstatement is there, the effect of that misstatement on the financial statement after consideration of materiality. Materiality, what is the essay number? Please tell me. Essay. Materiality in planning and performing the audit. Please tell me the essay number. Do not look at the module. So why I am not getting any replies? अच्छा आ गए हैं. Bhumika Om Krishna Gupta is saying, Sneha is saying 320, Swati saying 320, correct. ठीक है. So this is the responsibility of the auditor in terms of SA 450, and these are the objectives of the auditor. What? That before forming an opinion, auditor will evaluate the effect of two things: identified misstatement on audit, uncorrected misstatement on financial statement after consideration of materiality. What is meant by uncorrected misstatement? We all have understood, but let us just look at the definition given by SA 450. So uncorrected misstatement are the misstatements that auditor has accumulated during the audit and that have not been corrected by the management. Simple. So auditor's responsibility, audit objective as same. Now, when auditor has identified any misstatement, he will accumulate the misstatements identified during the audit other than clearly trivial. Trivial is which are not material. So which are clearly immaterial. Other than that, auditor is going to accumulate all the misstatements that he has identified during the audit. So what can be a misstatement? So an example is given in your module. So let us just have a look. For example, an inaccuracy in gathering or processing data from which financial statements are prepared, or an omission of an amount disclosure can result in a misstatement. An entity has wrongly capitalized machinery repair expenses amounting to 5 lakhs, resulting in overstatement of profits. It is an example of misstatement. So during the course of audit, any misstatement that auditor identifies, he'll keep on accumulating except those which are clearly trivial. Trivial is what? Immaterial, small, right? Now, when the auditor identifies the misstatement during the audit, auditor may find it necessary to revise the overall audit strategy and the audit plan. So auditor to determine whether overall audit strategy and audit plan need to be revised, if, in what situation auditor will consider it necessary, if the nature of identified misstatement and circumstances indicate that other misstatement may also exist which can be material. So when will auditor revise the overall audit strategy and audit plan? If the nature of identified misstatement and the circumstances indicate that other misstatement may also exist which can be material, or when the aggregate of accumulated misstatement approaches the materiality level as per SA 320. So first is what? When the nature of identified misstatement and circumstances, it indicates that there can be other misstatements also, and all of them taken together can be what? Material. Or the second situation is where the aggregate of accumulated misstatement has already approached the materiality level in terms of SA 320, right? In such a situation, auditor will request the management to examine the various class of transactions in which there is misstatement to understand what is the cause of misstatement. And auditor will perform procedures to determine the amount of actual misstatement. अभी तो identify किया है ना misstatement. So what is the actual misstatement? And for that, auditor is going to perform additional audit procedures. Simple है? Is it simple? Let me just take you through the module for this. So, consideration of identified misstatement. The auditor shall determine whether overall audit strategy and audit plan need to be revised if the nature of identified misstatement and circumstances indicate. Nature of identified misstatement, keyword, circumstances indicate that other misstatement may exist when aggregated with misstatement accumulated during the audit could be material, or the aggregate of misstatement already accumulated during the audit approaches the materiality determined by SA 320. So what will auditor do? Auditor will request the management to examine the class of transactions or disclosure in order for management to understand what is the cause of the misstatement identified by the auditor. He will perform the procedures to determine the amount of actual misstatement, and such a request may be made based on auditor's projection of misstatement. And if at the auditor's request management examine the misstatement that were detected, the auditor shall perform additional audit procedure in order to see whether misstatements remain. So if at the request of management of auditor, management has examined and taken corrective actions, auditor will again perform additional audit procedure to see whether misstatement still exists, still remains or not. Is it clear? Now with respect to the communication. So will auditor just accumulate? No. Auditor will communicate such misstatement on a timely basis, all misstatement accumulated, to the appropriate level of management unless prohibited by law or regulation. So all misstatement that has been accumulated, auditor is going to communicate that to the appropriate level of management on a timely basis unless and until the same is prohibited by law and regulation. See, if management, if auditor communicates such all misstatements on a timely basis to the management, this is going to help the management to take corrective action to take the to correct the misstatement, and thereby helping the management to maintain accurate books of accounts, because timely basis पर बता दिया गया है ना management को to correct all the misstatements. And further, this is going to reduce the risk of material misstatement of future financial statement. By because see, auditor has told the management with respect to all misstatement, whether material or immaterial. Management has corrected them also. So first of all, though, it will help the management to maintain accurate books of accounts. And secondly, it is going to reduce the risk of material misstatement. See, and reduces the risk of material misstatement of future financial statement because of the cumulative effect of immaterial uncorrected misstatement related to the prior period. Because material misstatement hoga that must have been corrected. So also, since auditor has told the management with respect to all the misstatements, so any material misstatement must have been corrected by the management. So read this point again. The correction by management of all misstatements, including those communicated by auditor, enables management to maintain accurate accounting books and records, and reduces the risk of material misstatement of future financial statement because of cumulative effect of immaterial uncorrected misstatement relating to prior period. Why? Because the cumulative effect of immaterial uncorrected misstatement will not be there. Why? Because the same has been told to the management on a timely basis and the management has taken the corrective action. Is it clear? Okay. And if the management refuses to make the correction, auditor will obtain an understanding of the management reason. And auditor is going to take that understanding in account when he is evaluating whether the financial statement as a whole are free from material misstatement. This is what free from material misstatement. Is it clear? Is it clear? So what are the reasons of the management? Auditor is going to consider that. and he shall take that understanding in account when he is evaluating whether financial statement as a whole are free from material misstatement. Right? Now, when auditor is evaluating the effect of uncorrected misstatement, so let's say there are certain uncorrected misstatement which management is not correcting even after auditor has told the management about that. So prior to evaluating the effect of uncorrected misstatement, auditor will see whether there is a need to reassess materiality, whether appropriate in context of entity's actual financial results. So the materiality that he has assessed as per SA 320, whether there is a need to reassess such materiality. So that he's going to consider, that is, he's going to consider whether materiality level need to be reassessed or not, right? Now, the auditor shall determine whether the uncorrected misstatement, what are uncorrected misstatement? We all have seen that the statements, misstatement that have been accumulated and the management has not corrected them. So, in order to determine whether uncorrected misstatements are material, individually in aggregate, auditor shall consider the following: the size and nature of the misstatement, both in relation to the particular class of transaction account balances disclosure. If you remember, when we did SA 320, we saw that size and the nature of the transaction determines the materiality. Size is, if let's say out of the revenue of let's say 10 lakhs, there is a misstatement in 1 lakh. It can be material. Vis-a-vis a misstatement of 1,000 rupees. Nature is, if any taxes are to be paid, this becomes material even if it is for rupees 100. And also if any disclosure requirement is there. So that is material irrespective of its size. So when auditor is considering whether the uncorrected misstatement are material or not, he'll consider the size and nature of that misstatement. Also, the effect of the uncorrected misstatement relating to the prior period auditor is going to consider. Simple. Now, now what will be the next step? Tell me, auditor has accumulated the misstatement. During the course of audit, auditor has on timely basis asked the management, requested the management to correct the misstatement. Management has not corrected the misstatement. There are certain uncorrected misstatement. Now, what will be the next step? To whom will auditor communicate? TCWG, those charged with governance. Om Krishna Gupta, Bhumika, absolutely correct. So the next topic is communication with those charged with governance. So auditor is going to communicate with those charged with governance about this is what uncorrected misstatement. Okay. Regarding the effect of uncorrected misstatement on the opinion of the auditor. And auditor is going to identify the material uncorrected misstatement individually. Also, auditor will request those charged with governance that uncorrected misstatement be corrected. And he will also communicate the effect of uncorrected misstatement of prior period to those charged with governance. So first of all, if auditor is going to consider communicate what? The effect of uncorrected misstatement, that the effect that uncorrected misstatement are going to have on the opinion. That is how it is going to, the auditor will either modify the opinion because the misstatements are uncorrected. Then he'll individually also identify the material uncorrected misstatement, and he'll request those charged with governance that such uncorrected misstatement be corrected. He'll also communicate those charged with governance the effect of uncorrected misstatement of the prior period. Clear? And the auditor will obtain what? Written representation. Request the written representation from management, those charged with governance, whether they believe that the effect of uncorrected misstatement are immaterial individually or in aggregate, and such written representation shall have an attachment of summary of such items. See, if any uncorrected misstatement is there and management says that it is immaterial, so auditor is going to obtain a written representation, and such list of uncorrected misstatement will be attached to the written representation. And documentation requirements. Documentation will be required with respect to what? First point, if you remember, amount below which misstatement is clearly trivial. So that will be documented. all misstatement accumulated and whether the same has been corrected or not, that will be documented. Auditor's conclusion that uncorrected misstatement are material individually or aggregate, the basis of auditor's conclusion. Let me just take you through the module and then we will do the related question to this essay. So very small essay and very important also. Essay 450, evaluation of misstatements identified during the audit. So we have seen that before forming an audit opinion, auditor will evaluate the effect of two things: identified misstatement on audit, uncorrected misstatement on financial statement, after considering what materiality. Uncorrected misstatement क्या होता है? Uncorrected misstatement, the misstatement that have been accumulated by the auditor during audit, but they have not been corrected. Corrected by whom? By the management. So these are the responsibility and these are the objectives which are the same. Accumulation में we have seen auditor will accumulate those except for what are clearly trivial. Now, when auditor will consider it necessary to revise the overall audit strategy and audit plan, if the nature of identified misstatements and the circumstances indicate that other misstatement may exist when aggregated with the misstatement accumulated during the period could be material, or the aggregate of accumulated material approaches materiality in terms of SC 320. अब अगर आइडेंटिफाई हो गया है, ऑडिटर इज गोइंग टू रिक्वेस्ट द मैनेजमेंट टू एग्जामिन द क्लास ऑफ ट्रांजैक्शन जहां पर मिसस्टेटमेंट है. व्हाई? इन ऑर्डर टू सी व्हाट इज द कॉज ऑफ द मिसस्टेटमेंट एंड ही विल परफॉर्म प्रोसीजर टू सी व्हाट इज द एक्चुअल मिसस्टेटमेंट. सी अभी तो ऑडिटर ने आइडेंटिफाई, लेट्स से विद रिस्पेक्ट टू परचेजेस, ऑडिटर हैज आइडेंटिफाइड 100 रुपीज का मिसस्टेटमेंट. So auditor asks the management to see what is the cause of misstatement. Based on this cause, auditor will see ना actual misstatement कितना है. Let's say 100 तो sample में आ रहा है ना. So auditor will project it on the entire financial statement. So that is why it is mentioned actual misstatement, right? Such a request may be, for example, based on auditor's projections of misstatement, right? And if management has examined the class of transaction, then auditor will perform additional audit procedure to see whether misstatements still exist. कम्युनिकेशन में क्या है? टाइमली बेसिस पे करना है, ऑल मिसस्टेटमेंट्स को करना है, एप्रोप्रिएट लेवल पे करना है, अनलेस प्रोहिबिटेड बाय लॉ. And what shall be the request to correct those misstatements? Timely communication to the appropriate level is important as it enables to evaluate whether the items are misstatements, inform the auditor if they agree or take necessary action as necessary. And we have seen that all misstatements को correct करेंगे तो it helps the management to maintain accurate accounting books and reduces the risk of material misstatement of future financial statements because of the cumulative effect of immaterial uncorrected misstatement related to prior periods. Why? Because timely basis पे बताया तो वो ठीक हो गया होगा. And if management refuses to do that, understanding of management's reason लेना है, and auditor shall take such understanding into account when evaluating whether financial statement as a whole are free from material misstatement. Prior to evaluating the effect of uncorrected misstatement, auditor is going to consider, he'll going to reassess the materiality in accordance with SC 320 to confirm whether it remains appropriate. And when he is considering materiality, he'll see the size and nature of the misstatements, and he'll also see the effect of the uncorrected misstatement of the prior period, right? Communication दो स्टैंड विद गवर्नेंस को करना है regarding uncorrected misstatement and the effect they have on the opinion of the auditor's report in the auditor's report unless prohibited by law or regulation, and he will identify material uncorrected misstatement individually. Request also that uncorrected misstatement be corrected, and he shall also communicate the effect of uncorrected misstatement relating to the prior periods and with prior periods and the financial statement as a whole on the relevant class of transaction and the financial statements as a whole. Written representation क्या लेना है? That whether the uncorrected misstatements are immaterial individually or in aggregate to the financial statement, and the summary shall be attached to the representation. Documentation किसका करना है? That the misstatements below which are what? The amount below which the misstatement could be clearly trivial, all misstatements accumulated and whether the same has been corrected, and if any uncorrected misstatement is material individually in aggregate, the basis of that conclusion. So with this we have done essay 450, but let us just quickly do this test your understanding question number 4. Quickly send in a reply whether essay 450 is clear to all of you, and read this test your understanding 4, which is given on page number 7.28. So I've received replies from Om Krishna Gupta, Bhumika. A big yes, I have received. Others also, please reply. Read this test your understanding for. You are nearing completion of audit of a company. On going through your working paper, it is noticed that finished goods inventories was valued by 2 CR. It has also been noticed that freight of 10 lakhs paid on import of machinery was charged to statement of profit and loss. Discuss how you should proceed and communicate in above situation before signing the audit report. Swati, correct. Others also, please reply. Read the question carefully. We are doing test your understanding fourth. So see these instances whereby there is what overvaluation of inventory by 2 CR and the freight which should have been capitalized, the same has been charged to P&L. These are what examples of misstatement. Okay, this is clear. Now, what will auditor do? See, it says that you are nearing the completion of audit. So auditor can communicate with those charged with governance and request for the correction. And in case these are not corrected, he'll understand the reasons. And when he's considering the materiality, he'll consider those reasons also. And effect of uncorrected misstatement on the opinion and auditor's report should be communicated to those charged with governance. So let us just quickly have a look at the answer given on page number 7.59. I have not received replies from all of you as to whether you have understood this essay 450. Bhumika, correct. Your answer is correct. Sneha, correct. So let us have a look at the answer given at the back of your chapter. So it says that the instances highlighted in the above situation are examples of misstatements identified during audit. Okay. So the auditor should communicate above identified misstatement to those charged with governance and request for corrections. In case these are not corrected, understand the reasons for not making the correction and reassess the materiality. It should also be considered whether uncorrected misstatements are material individually or in aggregate. Effect of uncorrected misstatement on the opinion in auditor's report should be communicated to those charged with governance. Is it clear? Is it clear? Students, please send in your replies. So Swati Singh, yes. Others also please reply. Bhumika Singh, yes. Swati Singh, yes. Sneha Singh, yes. So that's good. So students, with this, we have covered 3 important essays from this chapter and 3 more are left. Your last year questions, since today we are not left with much time, so that I'll take up in the next session. But again, before concluding the session for today, first of all, a request to all of you that please go through the 3 essays that we have covered today and try to learn them today itself. And then whatever time you have, go in backward direction and start from chapter number 6, then 5, 4, 3, 2, 1, and try to um, like now I'll say try to revise, because I am assuming that learning part has been done. And if learning has not been done, try to learn and revise all those chapters so that before coming for the next session, as many of you were saying that ma'am, only 1 or 2 chapters are left. So before coming for the next session, you should have done all the chapters that we have covered so far. That is till chapter number 6 and the portion that of chapter number 7 that we have covered today, right? So I hope you all will be doing in the same way in which I have asked you to do. So Kiran Bala is saying yes. Om Krishna Gupta is saying yes. Swati is saying yes. So thank you, students, for being patient listener and for making today's session very interactive. So I really enjoyed teaching you today's sessions. Other sessions were also interesting, but today's session was more interesting. Why? Because you all were replying, you all were making efforts, right? So thank you and see you for the next session, which is on on chapter number 7, and thereby we'll be completing this chapter number 7 completion and review, right? So thank you and bye bye. Over.